Welcome to S&R Properties Real Estate Market Report. My name is Rick Annunziata, and today we're going to be walking through the impact of rising mortgage rates on the housing market. We're going to give you a spring market update, and we're going to give you the 5 slides you need to have in your phone this season. So let's get started. You know, a lot of people are seeing mortgage rates rising. They're asking the question, are home prices going to fall? What's going to happen to sales? And there's a lot of questions out there and a lot of uncertainty. So what I'm going to start with is a look at how mortgage rates have been rising this year. Now, this is data from Freddie Mac, and it goes all the way back to the beginning of this year. And what you can see over there on the left is that mortgage rates started out at 3.11% for the average 30 years fixed at the beginning of the year. And they have just steadily climbed since then, up to 4.76% is the latest data that we're looking at right now. Now, you may see something slightly higher or slightly lower in your market, and that's very realistic. The data that Freddie Mac presents here is actually look back at the previous week. So as the very end of March, average 30-year fixed at 4.67%. Now, Freddie Mac also predicts that we will continue to see mortgage rates rise, though at a more moderate pace. Now, the big question people are asking is what's going to happen to home prices as mortgage rates rise? You know, a lot of people think that when rates go up, prices go down. Well, I want to share with you today the data that our office has pulled together on this that actually contradicts that. So what you're looking at here is the impact of rising rates on home prices when mortgage rates rose by more than a percentage point. So this goes all the way back to October of '93, so almost 30 years. And it shows you that there was an average of about 8% home price appreciation as mortgage rates are rising by more than a percentage point. So overall, what we can see is that rising rates historically have not had a negative impact on home prices, which is a bit surprising, but the data confirms that. So let's look at what the NAR is saying. While higher short-term interest rates will push up mortgage rates, I expect some of this impact to be mitigated eventually through lower inflation. Thus, I expect the 30-year fixed mortgage rate to continue to rise, although we aren't likely to see big jumps that occurred over the past few weeks. So what is this saying? It's saying that inflation is driving this increase in mortgage rates. And we expect it to continue to rise. We expect to see it to continue to rise, but it won't be quite as at a rapid pace as we've seen over the past few weeks. And I want to share with you also what Freddie Mac is saying here, that history suggests that when rates rise, there is an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices slow. So Freddie Mac analyst shows that a 1% increase in mortgage rates results in home price appreciation that is 4 percentage points lower. For instance, a 1% increase in mortgage rates would change home price growth from 11 to 7%. So what is Freddie Mac saying? Well, we certainly feel that home price appreciation will slow. Mortgage rates will slow some of the frenzy. But we're not talking about depreciation. We're talking about a softening, a deceleration. And that's what will help slow some of the frenzy as we move forward in the housing market. But prices are not forecast to drop because demand is just too high. You'll see some buyers leave the market, but there's not enough inventory to satisfy this increased demand. What I want to show you now and turn your attention to is the spring market. And we're here in April, and certainly interest rates have dominated a lot of what we talked about here in the last couple months with the rising interest rates. But let's hop in and take a look at the spring market and give you a spring market update. And this is first from Mike Simonson from the Altos Research. I think said it best. He said this: we keep watching for it, but there are absolutely no signs of market slowdown anywhere in the data. If anything, we're seeing the market continue to heat up. And no doubt we're in a very, very busy market. Have been in ones for the last couple of years, all through the time we were in COVID, all through last year, and certainly coming into this year. And many were saying, okay, maybe the market's starting to moderate, but we're seeing a very, very busy market right now. We have to look at the inventory component, because today what we're seeing is drastically low inventory. You know, inventory today is lower than it was in January of 2021. And keep in mind that that was really historically low. So very, very low inventory. It's a huge deficit. And when inventory is that low, we want to think about what's projected to happen going forward. Home prices are projected to continue rising because there just aren't enough homes for sale in the market. You know, we talk about supply and demand a lot in this environment, and that's what drives home price appreciation. We're also seeing plenty of buyers in the market, and it's really a matter of buyers that can't find a home to buy. There's just not enough inventory to do that. So when you see headlines about a softening home sales at any point right now, it's not because of rising mortgage rates. It's because there just aren't enough homes to buy, and buyers who want to buy aren't able to find them right now. Now, recently, there was a report in 60 Minutes about Wall Street companies, these big companies, real estate firms that are purchasing residential real estate all through the southern states. And they're using that property as residential rental properties. So that's also adding to the supply and demand issues across the country. Now, the NAR just came out with the most recent buyer and seller traffic maps. And let's start here with the buyer traffic map, which you can see all over the country with a few exceptions. Strong traffic from buyers all over the country, with the exception of only a few states. But as we head into the spring market, very, very strong buyer demand. And the rise in interest rates is not slowing buyers down across the country. Of particular importance is active listings, increased in this country for the first time in 6 months. Now, forecasters that are looking at the market is saying, you know what? Well, we thought it was going to be this amount of activity, but we see it being a little bit more. And I think it's articulated well in Fortune. They say now more industry insiders are throwing out their previous forecast and replacing them with more bullish short-term looks. Indeed, some experts say the 2022 housing market might go down as one of the most competitive in history. Strong buyer demand with weak seller traffic, all of this is leading to a very, very competitive market. Now, this is the latest look from CoreLogic on price acceleration. You know, as we came through last year, we said, okay, prices seem to have peaked, if not plateaued. And what we're seeing through November, December, now January, these numbers ratcheting up slightly in the amount of appreciation year over year. So a very, very competitive market. 19% appreciation in January. Let's call that a lot of appreciation, well ahead of historical appreciation. I think this is also summed up by Craig Lazzara from the Case-Shiller report. He said, last fall, we observed that home prices, although continuing to rise sharply, began to decelerate. Even that modest deceleration was on pause in January. Remember that previous slide we showed you? The 19% year-over-year change for January was the fourth highest reading in 35 years. Now, here are 5 slides you really need to keep handy, and here we go. The graphic here shows active listings as compared to new listings going back to August of 2021. So let me break this down for you. The blue are active listings each month, and the green are new listings that are taken during the month. Well, you see all through fall and coming into the new year, active listings outpaced the new listings until March, when new listings actually outpaced the active listings. So what does that do? That shows a great sort of picture of what's happening in real estate today. As soon as something comes on the market, it sells, and it sells right away. And you can see that here in March. Look at the new listings outpacing the active listings in the market. The other slide that I think that does a great job of showing where the market is and what you know all the issues are is in single family housing units completed. And this tells a story of why it's so hard to find a home right now, why prices have risen the way they've risen. And the simple answer is right there in the green. For 14 straight years, we've been below the 50-year average in builds in this country, going all the way back to the 70s. And what I always tell people is literally back in the 70s and 80s, there were more homes completed in this country than there have been in the last 14 years. That's surprising. The last decade, really. And all of that coming out of the fallout of the home crisis in 2008. Builders being extremely hard and having to build back slowly their capacity, their ability to bring new builds to the market. They were hit really hard. But that, no doubt, the lack of availability of homes coming to market has really constricted supply. So a lot of people want to buy. driving the price up, making it hard to find a home. Now, this graphic does a great job of showing that the other issue I think is going to be a big concern for a lot of consumers this spring is inflation. This is a graphic you've probably seen before. This is home ownership as a hedge against inflation. And that's what we want to be able to show people literally. When you're in an inflationary economy, you want to be invested in hard assets that outperform inflation. And this is going back all the way to the 70s. The blue bar there being the inflation rate, the green bar being home price appreciation. And you see most decades, home price appreciation has outperformed inflation. Maybe neck and neck in the 80s. A little bit more inflation in the 2000s than what we saw in home price appreciation. But we know there was something going on in the 2000s in that housing crisis. But for many of those decades, housing has well outperformed inflation. That's something to keep in mind as folks are concerned about inflation. You know, many people, as well as thinking, should I buy right now? Is this the top of the market? Well, the graphic right here shows what's at stake in the Home Price Expectation Survey. The Home Price Expectation Survey is a survey of 100 economists, real estate professionals, market investor professionals that say, what do you think is going to happen with home prices between here and 2027? And this is the potential growth in household wealth over the next 5 years based solely on increased home equity if you purchased an averaged home at about $360,000 in January of this year. What do you stand to lose? Just over $96,000 in home equity. Now that's real money in price appreciation of coming years. That's a really important number to look at. All the folks that are waiting in the sidelines right now for home prices to go down, this is a look at the experts that we follow. There are 7 experts here on the average home price appreciation being 6.7%. You see it in the green bar right there. There's nobody literally right now forecasting prices to go down. One side, Zelman saying 3%, CoreLogic is saying 9.6%, and you see everywhere in between there. But no doubt this competitive spring market, this competitive year, we will see home price appreciation. I think they'll raise this appreciation number as we move along throughout the year. But no doubt we're going to see appreciation in homes this year well above what we've seen in historical years. Now, I hope this information finds you well. We're grateful that you took the time to watch. So I'll wrap up on that and we'll talk soon. And remember to read, take a look at our website's FAQ page and also some of our blogs that give you a lot of information on the market. And thank you for watching S&R Properties Market Report, and we'll talk again soon. Thanks for watching.